This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, August 25th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down a penny and 3/4 at 5.13 3/4. September soybeans were down 5.5 at 12.10 and September Chicago wheat was down 10 at 6.71 3/4. This morning we had an export sales announcement: 132,000 metric tons of soybeans to unknown destinations. That was for new crop 26. Yesterday afternoon we got crop conditions. Corn saw a 3% drop in the good to excellent category, down to 57% now. That's against 71% a year ago. On the soybean side, 60% good to excellent. That was down 1% from the previous week and 9 points lower than a year ago. On the spring wheat side, also saw just a little bit of a reduction, 51% in the good to excellent category. That's down from 52% last week. Still slightly above the year ago levels of 49%. And on the spring wheat harvest side, a pretty significant jump week over week, 62% now. That's up from 41% last week, and 52% is the average. Good morning, fellas. Starting to get some private tours that are going on. I know Pioneer did their tour through Iowa. Came back with, I would say a different, slightly different narrative than Pro Farmer. Dustin, maybe share a few thoughts on what we've seen there. Also, your take on the markets as we started the week, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, so the Pioneer number is quite comprehensive. It's like over 4,000 field samples, and I think it's pretty typical for them to be well above Pro Farmer's estimate when they put out their raw number. They were last year as well. But that kind of doesn't show that there's a major disaster in Iowa, and that's one sign that maybe the number could be maybe a little overzealous on the yield drops, like we've been talking about. I don't know if it is or not, right? The Pro Farmer number could be an early sign of a real problem, or it could be like a number of other years where they kind of underreport what actually comes out in the end. Frankly, it's really, really hard, obviously, to tell. This is a very difficult task, and I think that there's a lot more work that Pro Farmers put in than most people, so I don't want to discount that number. But I also want to be very cautious because, when dealing with clients, that directly measure their own yield estimates and have agronomists that kind of give them a range of outcomes, I think that's a much more controllable number. And when you're above $5, you can make an assessment of what you think that means for you, and maybe even extend that out to what you think is going to be for the county and how that impacts your insurance decisions. But I think sometimes it feels fruitless to go out and try to fine tune that national number when really all that matters is you're trying to run a business. You're trying to think about like where your risks are for your business, and the biggest job, in my opinion, for a marketing firm is trying to take that emotion out of it right now, because we finally have good return on investment numbers in front of us that we're looking at every day for growers, and what can we do with that? I don't want to sound like a broken record talking, kind of dulling down market opinion right now, but the stakes are just too high to go out and say who's right and who's wrong. I'm just kind of giving an example here with this Pioneer number that maybe it's not as bad as we think, and that would be where the risk is.
That's fair assessment. Justin, what are your thoughts here?
Yeah, I think, you look at, Pioneer, for example, did, the entire state, way more samples than all of Pro Farmer did across all the states, very consistent method. So I think the important part of that is it showed, a slight drop from last year, right? So there's, I think the pro farmer direction was right, that we're not as good as last year for sure. But to Dustin's point, I think we're letting our imaginations get a hold of us. And every day that the corn market goes up, we lower the yield. I think that's just natural. It's not the first year that's happened. That happens a lot. It happened in June as we broke, farmers calling in and just kept raising their own personal thoughts of what their yields were because, personally that just helps, justify the break, right? Like, well, my yield must be really big or, it has to be really big. The beauty of a counter seasonal rally like this is you can go look at your own crop, to Dustin's point, and block all of that out and just say, okay, here's what I have. Here's what the market's giving me. Here's what I can do. And very rarely, that's why it's counter seasonal. Very rarely do you have this opportunity where you have contract highs going into harvest. And when the crop's, the most known it has been all year. So I think you just got to look at it as like, this is a great advantage. This is a windfall. Obviously, can it go higher? Yeah. But to Dustin's point, extreme caution. I mean, your funds are loaded up long, everyone's super optimistic going right into harvest. You're going to have the biggest supply that we'll have all year, pretty soon. But, we'll have our carry-in plus our new crop. So yeah, you got to be cautious. Anytime this kind of environment happens, which doesn't happen very often, you got to take advantage of it.
What's your take? So we're, a lot of news on these potential for expanding SREs as it pertains to the bean oil market. Justin, we've seen a pretty good break here in bean oil, certainly on the heels of what's gone on in soybeans as well. But
yeah,
I guess maybe a few comments.
Yeah, that's just always the risk with soybean oil. It's got a fantastic story, but it's so politically driven. Anytime that a market's dependent on government is a risk, right? So, I mean, it can do a rug pull at any time, and I mean, it's similar to geopolitical issues that we see with, wars and tensions and the Strait of Hormuz. Like, stakes are high in all these markets, and the amount of money moving around is high. So soybean oil, as percent of oil shares, obviously been record high. It's been there for a long time. Funds were record long, and they're liquidating. And the same thing could happen with something like corn or beans. Everyone talks about, just another point, everyone got super excited about the pro farmer number on corn, and nobody talked about beans. They just pretended like it didn't exist, that they actually raised it from the government. So it's kind of one of those like, well, they're definitely right on corn and they're way off on beans, kind of attitude. Like, well, what if they're right on beans and wrong on corn? Mm-hmm. Being devil's advocate, and that's just the risk of, you give people that don't know an area a map and say, drive down this route, stop in a random field. You don't know anything about that field. You don't know, really anything about the area, versus like someone that's going out doing their own tour of their own crop. That field, what it can do. All those kinds of things just matter. And when you're talking on a national scale, I mean, really, again, props to them for going and doing it and trying. But again, it's such a small data set when you really look at it. So that's why you just have to, take it as information, say, okay, there's reasons we're rallying, all those kinds of things. But it's still, if you, just like crop conditions, any of those things, if that's what you're betting your farm on, you're making a mistake, because those can be misleading too, good or bad. So.
Very good. Ben, anything to add?
Yeah, I think that we're a little bit of an inflection point here in corn, gapping up into a new contract high on Monday with significant volume, leaving a gap. You got to let the market tell you if we're going to accept a new realm of corn trading for a while, or this is a rejection. And it's worth noting how fast and how far we've come. The 20-day moving average is at 480. You could have a pretty big correction here and probably not quite shake the managed money. I think they need to see a harder data point and maybe some reconciliation between Russia and Ukraine to exit. But it's also worth noting that I think that, and I'm willing to stand corrected, but I think 2026 up until the last week has been pretty brutal on managed money in corn. So we'll see. They're certainly long enough now that you could have a significant liquidation event if a few things were to fall into place. But my first point is to watch and see how we handle the old contract high over a couple days here. So gap from 9 to 10.25, old contract high, I think 12.5. So keep an eye on that.
Very good. I've got a couple of minutes here around. Let's move over to Livestock here. It's kind of becoming a trend, but we come out strong out of the gates and then finish lower in cattle. Interesting stories this morning about this new phased reopening and the additional ports that they're talking about. Could potentially be a big deal here in the next 30, 60, 90 days. And then pretty uneventful in the hogs. So maybe talk a little bit about cattle for us this morning.
Yeah, absolutely. It was a good start yesterday. I think everybody was a little bit optimistic that we would finally see some better price action here actually stick, but naturally, the just kind of fell apart here right after the open. I mean, it was a good move. It was about up, over $1 at one point, but the market is really shaken up, especially as the border begins to reopen. So now that Douglas, Arizona is open, Brooke Rollins came out and pretty much just said that the second port's going to be opened within the next 30 days and the third port 60 days from now in New Mexico. So I think, Trump's agenda, I think, is taking hold, and the market feels like it's, nobody really wants to get in front of it right now, even though the market's on a pretty heavy decline. Still haven't seen any cash yet. Beef was just kind of mixed here. Choice was unchanged, select up 370. So I think at this point, we're really trading the headlines and we're really trading the agenda right now. And just overall, there's a lot of fear that we're going to start getting a lot more cattle over the border and quickly. Obviously, this is a long-term process to rebuild the herd, but we're seeing the back end of the market come down a little bit. I do think there's a big case for the bear spreads right now. There's a lot of focus on the April. There's a big seasonal precedence with that spread in general, just over the next couple weeks here. So I think there's going to be a lot of eyes on that. Obviously, the feeder cattle board reaching kind of the lower end of the spectrum here. And there's a lot of gaps here on that chart on the way down as well. So I think that's something to be cautious about technically, especially as we're getting news from this administration. Just feels like every day that the market just doesn't seem to appreciate. So there's definitely still a decent chunk of downside risk here overall. And on the hog side of things, kind of a mixed close, maybe a little bit of short covering here. Open interest was up 30.75. So, you got to think just overall, I would say that we're kind of priced in a lot of bad news here, maybe starting to see some new buying here overall, but cash market's not doing anybody any favors here. Cash is down 487 on the national base price to 89.40. So new lows for the move there. A little bit of support in carcass. We may be entering that seasonal time frame where we start to see some support and some select cuts, just especially ahead of the Labor Day holiday. But the focus kind of shifts to cold storage report. I think generally maybe a little bit of a negative vibe here with total pork stops at 439 million pounds. That was up 9% from last month, but still down 3% from the month before. So, relatively normal there. So I think you just got a little bit of a give and take. Obviously, belly stocks were down almost 40% from last month. So nothing unseasonable about this report in general. So it just feels like maybe we'll see a little bit of short covering early, but overall, there's just not a lot of good news, especially on the cash side, to really add some real support here.
I appreciate the update there, right? Just came into the open here. We got September corn down $0.0125 here. 490 is the last. September soybeans are down 2 at 12.14. And September Chicago wheat's down 7 3/4 at 674. Links in the description, but go ahead and check out the War Room report. It's got access to premium content, reactions to USDA reports, and really just an overall deeper dive into everything we discuss here every morning on the War Room. So be sure to check that out. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which puts on a national scholarship competition for college students that are in the ag space. We awarded 5 very deserving college students with some significant dollars here this year. Check out the foundation. Get any questions on how to support, give us a call. Love to visit with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.